Hi everyone, Paige Panzarello here, the Cash Flow Chick. And I realized that I know what I'm talking about when I say that we have 23 different exit strategies in note investing, and that helps you to mitigate your risk. I realize that I know what that means, but you might not know what that means. So, what is an exit strategy? It's pretty simple. Exit strategy just means coming to the conclusion of your investment. So, when you go into real estate and real estate investing, for instance, if you decide to do a fix and flip, your exit strategy is to sell that flip after you have fixed it. And that that's kind of a singular exit strategy. Usually when you're in a fix and flip situation, you've put a hard money loan in place. That hard money loan is short term. It's probably pretty expensive, and it allows you to fix that broken piece of property. And the exit strategy is to sell it to an end user, pay off your hard money loan, and hopefully end up with a profit. So that's your exit strategy. When you're in a fix and flip situation, you don't have a variety of different exit strategies that you can usually implement. You do have some, but not many. So, in other words, you possibly could refinance that fix and flip property, that hard money loan out, and put a traditional mortgage in place, and then put a tenant in there if you can't sell it for some reason, right? So you have a couple of different avenues that might be available to you if you are in a position to put another mortgage in place. Some of you may not be. Typically, a traditional mortgage is going to require a personal guarantee, or be personally on the loan. And in a hard money situation, that isn't always the case. So again, when you're in a real estate investment, there's typically one, maybe two exits that are going to that you have at your disposal, such that you can kind of recapture your capital and hopefully some profit. In note investing, it's a little different. We have 23 different exit strategies. So, God forbid something go awry, if as long as we are of the mindset to pivot and change direction, we have many different opportunities available to us to exit that note potentially with a profit. It really does hedge against any kind of loss. Again, an exit strategy is just coming to the conclusion of your invested dollars. So in note investing, my preferred exit strategy, we usually use, of those 23, we usually use 4. Okay. That's in a day-to-day basis. My preference is to use an exit strategy called reperforming, right? Getting the borrower to reperform. If I can't do that, however, I can pivot, and I have many other exit strategies available to me, so I can maintain my profit and keep my invested dollars secure. So if obviously I want to work with my borrowers, I want to get them to reperform. So I'm creating a cash flowing asset out of a non cash flowing asset, and I get to help people along the way. That's an exit strategy. My preference is to cash flow that note. If I can get my borrower to reperform, then I will hold on to that for anywhere from 3 to 5 years, give or take. And then I will sell it to another note investor at a slight discount, but I'm maintaining my profit, right? If I can't do that, I can pivot. If I can't get my borrower to reperform, I can foreclose. I can offer them a deed in lieu of foreclosure. We can offer them a short sale. So they sell their property and they pay us a lesser amount than they actually owe us. All of those are exit strategies that I use day in and day out. We have so many other exit strategies and notes as well. For instance, in my preference, even in a foreclosure situation, I would prefer to sell that property to a third party buyer. So somebody goes to the foreclosure auction, they bid on, at the foreclosure auction, they bid on that house, and I'm going to get a check instead of the house. But you might be the type of investor that you want the house. So that's an exit strategy for you, where you're going to take that house, and you're going to fix and flip it yourself. So that's an exit strategy, right? For me, as a note investor, if I have to take a property to foreclosure in order to get my money, then I would much prefer to sell it to a third party end user, and they can deal with the property and I get a check. If that doesn't happen, now I have to pivot again. So let's say I take a property to foreclosure auction and it does not sell to a third party investor, right? Another person. Now what happens is I end up with the property. Well, again, because I'm a note investor, I now have many different options that I have at my disposal to try and recapture not only my original capital, but potentially some profit. I can turn around and sell that REO, that real estate owned, meaning that house that I've now foreclosed on. I can sell it to another investor and carry the paper for them to fix and flip it. That is an exit strategy. I can turn around and sell it to a fix and flipper just as it is. That, and not carry paper. Carrying paper just means that I'm going to carry the cost as the lender, as the bank. I'm going to earn some interest and I'm going to earn some points. I can sell it to an outright fix and flipper. I can sell it to a buy and hold investor. Same situation, where I carry the paper and become that person's bank, right? There are many different things. I could turn it into a short-term rental for myself. There are many, many different options as a note investor in our exit strategies, meaning coming to the completion of our investment and hopefully walking away not only with our original principal capital back, but with profit as well. Again, in this space, there's 23 different exit strategies. You can mitigate a lot of risk when you have that many exit strategies at your disposal. If you're in a situation where you're investing in other types of real estate investing, you might not, and it's very likely that you're not going to have 23 different exit strategies. You'll be lucky to have two in order to be able to save your profit. So that's part of what I wanted to talk about, because I talk about exit strategies all the time. And I realized as a seasoned investor, I know what that means, but you might not. So I hope I've shed a little bit of light, not only on what is an exit strategy, but how you can really utilize and have so many at your disposal to mitigate your risk, which, by the way, when you mitigate risk, you retain your profit, right? You take the risk out of the investment and you are able to capitalize on that profit. So I realized that you might not know what that means. So I wanted to come on today and talk a little bit about what are exit strategies and why they're so attractive in note investing. So I hope I shed a little bit of light on that. If you're interested in more information, feel free to reach out to me at cashflowchick.com. Or you can go to cashflowchick.com/info. I'm happy to send you a bunch of info for free. All right. See you next time. Bye.